Hi, investors, and welcome to another edition of 18 Minutes with 180 Markets. Well, friends, here at 180 Markets, we like companies that are quote unquote boring, that may be under the hood, but add a lot of value to the end product. And that is what we have today, because we are joined by Sparc Technologies and its managing director, Nick O'Loughlin, because Sparc has a product that can reduce costs, inputs 30 to 70% that are easily measurable. And at the same time, there's another part of the business that also offers investors what we would deem as a free upside optionality, which we always like. And with that introduction, Nick, welcome.
Thanks for having me, Greg.
Hey, Nick, it's been a little bit of a journey for you and Sparc. Maybe just set the scene for us a little bit. What got you interested in Sparc Technology in the first place?
Yeah, thanks, Greg. So Sparc Technologies is based in Adelaide. We listed via a reverse takeover in November 2020. And that listing was done off the back of some intellectual property from the University of Adelaide in graphene and the graphene hub that was based there at the time. What the business very quickly did was focus its efforts on developing additives utilizing graphene for the protective coatings industry. And we've been doing R&D and development on our product range, and in particular our flagship product, which is called ecosparc, ever since that point in time. And now we're at an inflection point whereby we made our first sale of our ecosparc additive to the protective coatings market in December, and we're targeting contracts for the ongoing sale of our additive products throughout the balance of 2026.
Great. And as far as for ecosparc, can you just tell us a little bit about the product itself and what is the problem that it solves?
Sure. So graphene is a material. It's a pure carbon material, and a bit like diamond has a certain structure, graphene has its own structure. It's a single layer in its purest form. It's a hexagonal lattice, which makes the material very, very strong, 200 times stronger than steel, incredibly flexible, and that has a number of other properties as well. The challenge with graphene is finding the right type, the right source of graphene that will work in a particular industrial application at the right price point. And that's what Sparc's been focused on. And what the graphene does in a protective coating, so these are paints that are used on infrastructure like the Sydney Harbour Bridge, like mining infrastructure, oil and gas, jetties, ports, etc. And they're used widely throughout the globe each year. What graphene does in those coatings, which are typically, their weakness is they're a bit brittle. Graphene actually, when dispersed correctly, increases the flexibility and therefore the durability of the coating. In effect, what it's doing is inhibiting crack formation within these epoxy-based protective coatings. And cracking is where you get water ingress, air, and the corrosive process starts. So as you mentioned at the top, we've seen results over 5 years or 6 years now of testing of our graphene additives improving these commercial protective coatings by anywhere from 26% up to 79% in terms of their anti-corrosive performance. So by incorporating graphene and our additives at relatively low dosage levels, we can significantly increase the durability of the commercial coatings in the market and thereby increase the time between maintenance events for these asset owners, like the mining company or the oil and gas company. And we're now proving that in the field.
Right. And Nick, so it becomes a very easy to understand cost-benefit analysis, so to speak, which is that here's what the product costs, it's going to save you this amount of maintenance, and then we can obviously calculate a net present value and so forth and so on?
That's exactly right. So we've done return on investment analysis on behalf of asset owners, looking at their coatings and maintenance costs. So for some assets which are on the coast, they might recoat the asset every 5 years in order to protect against the impacts of corrosion. What we've seen in the lab is significant anti-corrosive performance improvement. So if you can push out that maintenance event by 1, 2, 3 years, you save that asset owner a lot of money. And the reason for that is the cost of maintenance, a very small portion of that, under 5%, is the cost of the coating. So where we're pushing our additive at might add 10% to the cost of the coating, which in terms of the overall job, that's adding less than 1% on the cost of the job to get a significant time extension, which drives huge value for those asset owners.
Right. And speaking of driving value, Nick, we're at, as you mentioned, a real inflection point in Sparc, because now it took us a while to develop the product, but you've got the product, you've got ecosparc, and now you are starting to get signs of market fit because you do have some customers out there. You have had a contract in hand. Is that right? And maybe talk to us about Deluxe.
Yeah, that's right, Greg. So we have developed the product with a significant amount of lab testing, now field trials, which have had paint on asset in the field for over 18 months. And we've had some really supportive partners doing that with us, including most recently Dulux, where we've done a protective trial with them at Cape Jaffa on a lighthouse, which is a very impressive structure, which we announced in November. And that's now translating into commercial impetus and sales. So we made our first sale to an Asian coatings company in December. And we are quickly approaching having an ecosparc enhanced protective coating, which is widely used today in the market, to the extent of 10 million litres or thereabouts. Having an ecosparc enhanced version of that product released, which would be a significant step change for our business. On top of that, we actively work with 5 of the 8 largest protective coatings companies in the global market at various stages of testing and field trials. And I'm confident we can add not just 1, but 2 more ecosparc enhanced products before the end of the year. So with 3 products in the market, that provides us significant runway to boost sales rapidly of our additive. We're talking about large volumes here in terms of the coatings that are used, and we generate revenue of about $1 per litre of end coating product. So the overall market is 2 billion litres, to give your audience an idea.
Right, so huge market opportunity. And Nick, can you just talk about, as we're filming right now in February of 2026, for the rest of the calendar year, is it about sales?
Yeah, 100%. So as I said, the next key milestone is to have a fully fledged ecosparc enhanced protective coatings product, which will be released by a significant coatings manufacturer, a top tier coatings manufacturer. That would allow us, ongoing sales into what is a massive market that I just touched on. And from there, we'd be looking to add products 2 and 3 with additional coatings products released to market. Each of these products allows us, to, as I said, rapidly scale the sales of our additive. The products are used in the millions of litres per year, and the revenue back to Sparc, based on the pricing that we've discussed with the industry, would be about $1 per litre. Our gross margins are over 50%. So we can really quite quickly scale our business. We have commercial manufacturing capability already established in Adelaide. So we can support enough additive to get about 5.5 million litres of coating out to market, hopefully over the next couple of years.
Okay, wow. So you already have the facility established in Adelaide, and I assume it could ship it wherever is necessary?
Yeah, that's correct. So we sell additive by the can. It looks like a paint can. That gets shipped to coatings manufacturer X. They tip it in at the point of manufacture, just like they do a pigment and other additives that are used day in, day out. And then you've got the graphene-enhanced or the ecosparc enhanced version of that particular product, which then goes out to their sales force and into their, their global system.
Right. And just giving us a little bit more detail about, for Sparc Technology, the sales force and the sales cycle. How do you sell the product? Is it through another representative or directly from Sparc?
So directly from Sparc, we manufacture the additive and we provide that to the coatings industry. So the coatings manufacturers who sell their coatings to these heavy industrial asset owners, mining companies, oil and gas companies, etc. So we can produce that additive in significant volumes today. It's a very modular piece of equipment that we would ultimately look to do in region. So big markets, as you can imagine, at US, Europe, Middle East, Brazil as well. And we also have the option to toll manufacture in those regions. So that'll be a decision point for a year or so's time, because we do have the capability to get into the market with our own facility at this point.
Right. And Nick, I have to ask also, and I just did think about this, there's such a growth right now of infrastructure globally, and also even an aging, I suppose, of some older infrastructure. I think of the US highway system as just an example. Is this actually represent a secular tailwind for Sparc?
Yeah, definitely, Greg. So I guess what your listeners may or may not appreciate is the amount that corrosion costs industry globally. It's in the trillions of dollars, and that's due to failing assets, replacement of steel assets, maintenance of steel assets. It's a significant industry, and that's why the protected coatings market is so large. So I touched on it at the top, but the market excluding China is approximately 2 billion litres estimated by 2030 per year. Now, of that market, we estimate that about 500 million litres is addressable with the ecosparc additive, and that's due to either the cost point of the coatings product or the chemistry of the coatings product. We believe, and we've been told this by several of the companies we work with, that we do have the leading graphene additives in that space at the moment, in terms of the data that we've got behind them and their efficacy. So we have a run at this market kind of as a first mover, and that's part of the reason why it's been worth the journey, the 5 or 6 years that we've been developing the product, and part of the upside now that we're starting to get that product into market.
Right. Well, Nick, it is very, very exciting times here, and certainly we are definitely going to be looking forward to these sales. Now, switching a little bit, I mentioned in the beginning that there is some upside optionality in Sparc via hydrogen. Can you just talk to us about that a little bit?
Yeah, definitely, Greg. So we founded and invested in a company called Sparc Hydrogen at the late 2021. Sparc Hydrogen is a joint venture between ourselves, Sparc Technologies, the University of Adelaide, and Fortescue. And currently, our interest in the joint venture is 36%, alongside Fortescue, who also hold 36%, and the University of Adelaide, now Adelaide University, hold the balance of 28%. Over the last 4 years, we've developed novel green hydrogen technology, which is decoupled from the cost of power. So some of your listeners who may have followed this space will understand that the incumbent green hydrogen technology relies on electrolyzers. They use significant amounts of electricity to split water into hydrogen and oxygen. And therefore, the cost of producing hydrogen using that method is largely driven by the cost of power. Now, everyone knows that the cost of power is an issue, not just in Australia, but globally. And therefore, it's hard to see a lot of commercial impetus behind producing green hydrogen using that particular method. What Sparc Hydrogen is developing is technology based on a process called photocatalysis.
Right.
It uses photocatalyst materials in contact with water and sunlight to split that water into hydrogen and oxygen. We've now demonstrated that not only in a prototype 18 to 24 months ago, now in a pilot facility that we've developed with our partners at the University of Adelaide's campus, or Adelaide University's campus in Roseworthy, which is north of Adelaide. That pilot facility was commissioned and is now operational. It was commissioned late last year, and it's a first of its kind facility globally, which is demonstrating photocatalysis in the field under concentrated solar conditions, which is a key part of the secret sauce that we use, and we believe will allow this technology to get into market commercially.
Right. And so this is again, longer term upside optionality, a truly unique approach by this water splitting, if you will, because as you mentioned earlier, green hydrogen, the knock on it is that even if it's fantastic, it's just not going to be in its current form commercially viable.
That's true. For green hydrogen, using the incumbent technology, using electrolyzers to be viable, you'd need to see power costs more than half, and a bit further actually to really enable it to make a big impact on the hydrogen market, which is a massive market. It's 100 million tonnes per annum year market, which is actually larger than the seaborne iron ore market by value, believe it or not. So there's a massive opportunity to get green molecules into market if the cost point is there. And what we're doing in Sparc Hydrogen is taking a leading position in a method called photocatalysis. We're hoping to demonstrate that through our piloting work, which we're doing at the moment. And the value creation there, I believe, is really quite significant if we can demonstrate that these materials can be used in the real world using our concentrated solar technology. So there's a huge amount of upside there. The Sparc Hydrogen JV is funded through 2026. We received some grant funding last year, and it operates now with its own CEO, who we brought in late last year, Alana Barlow, who's an experienced executive from the hydrogen industry. So there's a lot of things that we're ticking off there over the next 9 to 12 months. And I think there's a lot to watch out for there that could really excite the market.
Right. Well, Nick, all I could say is that Sparc, I love the second word of the company, technologies, because this truly is a technology company, maybe not in the way that most investors think of technology, but it absolutely is. Nick, any closing words for the audience?
Just to say that I really appreciate the opportunity to present the story on the 180 Markets platform. We haven't done so in the past, and if any of your viewership has questions, etc., please feel free to reach out, because it is really exciting technology in really interesting spaces. They are global markets, they are significant markets, and our tech can really have a big impact. So that's why we're pursuing it.
Nick, thank you so much. We're very much looking forward to the next 12 months with you.
Excellent. Thanks, Greg.
Bye-bye.